Hi, and thanks for your continued interest in storytelling with spreadsheets. This is the third of 7 modules. In this module, we will be discussing 3 big concepts in financial modeling: operating expenditures, capital expenditures, and balance sheets. Be sure to have a copy of your template handy to follow along as we work through this module together. First, we'll start with operating expenses. Operating expenses encompass expenses that aren't directly tied to revenue. They also don't hold value that you need to generate the revenue you create. These expenses, like software, rent, and personnel costs talked about in the previous module, are just expenses your business incurs while it is operating. Nice that they named it with such a straightforward term, huh? The term is often abbreviated OPEX, just so you're aware. To connect this to the previous module, operating expenses are a major factor of the costs of goods sold, but aren't linearly tied to the unit economics of each good you sell. If my lemonade stand sells 1 cup of lemonade a day or 1,000 cups, I still pay the same amount for my health insurance every month. So in our template, we'll be able to see several assumptions we've made here. We have a 30% payroll tax and benefits assumption we've based on an industry research, and $100 insurance costs per stand per quarter, again based on our industry research. Googling and asking other founders in your entrepreneurial field can both be valuable sources of information to make these assumptions. Next, let's move on to capital expenses. Capital expenditures are valuable assets your company uses to make money that don't get used up when you make your product. These are typically big ticket items that form pillars of your business. They often cost a lot of money to buy or to produce, so it is important to keep track of them. Let's think about our lemonade stand here. For a lemonade stand, the physical stand is a capital expenditure. To buy the stand, you had to pay for the structure. Another example might be a turbo juicer for the lemonade stand. Turbo juicers are getting expensive. They're probably about $1,000, but they're essential to making the best lemonade stand and getting the most juice out of each lemon. Capital expenditures, or CapEx, can also encompass abstract assets like intellectual property or algorithms. One important difference between operating expenditures and capital expenditures is that operating expenditures are temporary expenditures that affect more of a limited period of time versus capital expenditures, which are more permanent. There are 3 special events that can happen to capital expenses over time that are important to note. The first of these is depreciation, the saddest of the 3 events. Depreciation is where your asset loses money over time. In our lemonade stand example, depreciation would be when our lemonade stand becomes less valuable by being left out in the rain, needing repairs to the decorations, and just generally falling apart. Maybe our $10,000 lemonade stand is only worth $9,000 at the end of the year. But there is an upside to depreciation. The taxes your business owes may decrease over time in proportion to how much your assets have depreciated. Amortization, on the other hand, is depreciation of non-physical assets. Maybe your lemonade stand has an exclusive advertising agreement to be the official lemonade of the Yale Bulldogs for 10 years. Each year, the value of that advertising agreement amortizes since it is valid for fewer years. Finally, we have appreciation. This is an exciting but rare event in business. In lemonade stand terms, if your stand is built on land downtown and downtown New Haven continues to prosper, that land might be worth more over time and people may actually pay you more than you paid for it in the first place. This is typically very good for your business as you made a wise investment, but can have tax implications. So in our model, we make the assumption that the cost of the lemonade stand is a simple $10,000. Now let's take a look at our template to see where our assumptions go. So here in our operating expenses tab of our model, you can see $100 per stand of insurance, as well as the salaries, which will be fed in from the personnel tab. We also have payroll taxes and benefits included here. Moving on to CapEx, we have the cost of the lemonade stand. And here you can see we assume that it will be a simple $10,000. If we wanted to take out a loan for the stand, or account for the cost over time, we could depreciate this cost over different quarters and years. Here we have set it up as a simple one-time expense. Now we'll move on to the last part of this module, the balance sheet. The balance sheet reflects the amount of assets or liabilities you have at a moment in time. This is a very important piece of accounting in established companies and can vary widely in startups. Because the amount of money a startup has on hand varies so drastically from day to day, we have not included the balance sheet in this template. However, it is important to note that the capital expenditures feed directly into balance sheets, while they don't factor in as directly to income statements. And that concludes this module. Thanks for listening, and we'll see you next time for our module on income statements, EBITDA, and visualizing growth.